Welcome back, YouTube. So in today's video, we're going to talk about some of the price action, take an updated look at the trend of Dogecoin, and discuss some of the macro events that's leading to a lot of these sell-offs that we're seeing in the market. Ultimately, we're still within trend, but it's just that we got through a curveball with the last Fed meeting, and you're seeing this play out in crypto as well as the stock market. So, but before we get into that, don't forget, check out Moomoo. I have a link in the description section. You get up to 15 free stocks when you do so. So getting into this, let's start with, I want to just point out before I get into the macros that we are seeing a increase in the shorts as far as for today, but this has not been the trend overall for Dogecoin. So this is not a result of necessarily like the shorts coming in. We've actually seen a pretty steep decline in shorts. So we're looking at, we had a spike yesterday, but today we're up around like 17%. But overall, the decline, which is like a penny and a half, basically. But I know when Dogecoin fluctuates, it sends panic out. I get the comments about it being dead and stuff like that. So the result of that penny and a half that Dogecoin is consolidated is not because of short price action. This is a genuine sell-off that we're seeing in the market, perhaps not by retail, but overall, this is absolutely coins being sold. And that ties into the segment of why we're seeing this consolidation. Pretty much, the last meeting that we had on here, we were talking about our expectations and how that should be bullish because we came in under expectations. The last video I made was 7.1%, which was below the projected CPI numbers. I think we're projecting somewhere between 7.2 and 7.4. We came in slightly below that, and the market was geared for takeoff. We were green up until the notes came out, and then the market started tanking, and we've been seeing a consolidation overall since then. And the reason for that is a lot of revisions took place on that report, revising the unemployment numbers for 2023, revising the overall target rate for the basis points. And this is saying that, okay, we still may have some time before the Fed actually U-turn. So this is them being quote unquote open to reducing the rate down to maybe a 0.25 next, which will be, I think, February. But them also pretty much staying on target, saying that, okay, well, we still need to get inflation down to 2-3%. So there's still a ways to go, considering the fact that we're still over 7%. So that kind of retracted a lot of the bullishness, stating that, okay, well, the Fed is definitely getting ready to U-turn, and we're probably at the bottom right now, which was the sentiment going into the market. So we better start buying. So that kind of gave the market like a boost, and we saw the rallying. But Powell did not answer anything directly, giving us any hope of a U-turn in Q1. And so this is leading us to believe, at least the market to believe, that we have at least another 3 months or so before we can get concrete evidence that the Fed is in fact going to U-turn. So that kind of took the wind out of the sails for the market. And we saw, if you were watching the charts live, I was watching it live inside of my group. We were getting ready to play like some options and stuff like that. And you just saw a huge red candle come in the second that those minutes came out, which was around like 2 p.m. And it just really started falling. So it's just, we're seeing that we kind of reflect overall in the market. And typically, like if you're long-term, so you know how to play the market both ways, it's not going to be that big a deal because the Fed will U-turn. But I know that for people who are looking to swing or looking to get out of their positions, it can be frustrating. So taking a look here at Dogecoin here, because we're establishing some support here. And of course, when we started getting the swings and stuff in the market, we broke that support. And now it looks like we're coming down, and we may potentially retest this and have a triple bottom here right off of the 7-cent mark. And as you guys know, if you are familiar with chart patterns, triple bottoms are certainly bullish. But the question is whether or not we're actually going to retest. We've had 2 rejections literally right off of the line here, and we're still forming this candle here. It doesn't have to be this candle. We can test, over the next couple of days. But it's looking like we're coming in for a triple bottom here on the 7-cent line, which is a bullish pattern. So the ultimate breakthrough for our next cycle and target is to get through this resistance here. This has established itself. This I'll say around the 10 to low 11 mark has established itself as resistance now, because when we, like I was saying with gap up and gap downs in like my previous video, there is no support or resistance here. This has to be established in this area. So it looks like we've broken our support, but we've established where the resistance is. So for now, it is in play between 7 and 11 cents. So now we're just going to have to build out our support here so that we can retest to the top. But the great thing is that if we do retest down here at the 7, we've established, we've triple bottom here, and we should have a consolidation somewhere in between 11 and the bottom here. But based off of previous trends, you see that we got this indecisive candle here, and we also got some few rejections here before we broke back up and to retest the 10, 11 cent mark. So I'd imagine, if I had to guess right now without getting like any of the momentum and stuff into the market, I'd say we triple test down here around the 7 mark, and we'd build out our support here at around the 9.5, 10 cent range. And this will kind of give us that a consolidated range to retest the higher 11 mark, because we've seen us have some pretty decent pushback here in the past. So this looks like a decent area for us to kind of like establish pretty much where we stand as we get ready to retest the 11 cent mark. So overall, a triple bottom is a bullish pattern, and even so, the market in general is consolidating. And I made a post about this on Twitter yesterday, because it's just I still, even though I've been charting and going over the information as far as for patterns to look for, resistance and Dogecoin, stuff like that, for over a year now, it still catches me off guard when Dogecoin is like the number 8 coin in the world, and the entire top 10, they'll do an identical pattern, and you'll see, oh, but the Dogecoin is dead, it's over, guys, and stuff like that. When I could better understand it if it was just Dogecoin and Bitcoin, Ethereum, Polkadot, etc. were unfazed. But that's never the case. It's always in unison. The patterns are almost like completely identical, and Dogecoin gets singled out as, oh, it's over. So I don't know if that's people with that soul trying to convince themselves that it's over, and so that they don't miss out or whatever. But it is what it is. I just wanted to put that in the video because I know that you can see a lot of information, not just for me, but overall. So it just kind of helps to put things into perspective, because the truth of the matter is, as long as we have uncertainty in the macros, which is i.e. the Federal Reserve, our interest rate points, when the Fed is going to U-turn, we're going to kind of be in that yo-yo. We need not just for crypto, but for real estate, for the stock market, we need a definite point of a U-turn from the Fed before we can say, okay, bear cycle over, and we should start to see an ascend. And and I know next year we're technically scheduled to begin our next bull run. So the Fed U-turning second quarter, somewhere around that area, that's perfectly in line with that. But ultimately, you need to confirm that in the macros. Macros first. And if you see, okay, there's information saying, okay, the Fed may U-turn here, then you can go to the charts and say, okay, well, looks like we're establishing support and stuff like that. But ultimately, macros control that. Like, it's not a matter of support or resistance or supply and demand, all that kind of stuff. That plays a part, but macros play a bigger part, because we can triple test here at 7 cents, and the Fed says, oh, you know what? Inflation's it's going to be a little tougher now, so we're going to do another 75 basis point hike. Best believe more institutional money is going to come out, and we're going to break that support. Retail is not propping up completely the market. I don't believe. I believe obviously they have money in Dogecoin. I think institutions have money allocated throughout the top 10, heavier obviously on the higher ones. But the way the market reacts and they move in unison, as I've said a million times, that is institutional money. So institutional money will react to institutional news, like basis point hikes and the Jerome Powell, doing an about face in a meeting and stuff like that. We're going to see things like this. So just kind of keep that in mind. All support, demand, resistance, all that kind of good stuff is broken at some point, but you just kind of have to couple it. It's either broken to the downside or to the upside. So you have to just kind of keep that in mind and couple that with your research. Charts are not all in all, but if you combine them with macros, you can kind of get a feel and at least get some great entries so that you can better position your portfolio. So sorry to go on that rant. Just kind of wanted to put that out there because I'm seeing a lot of the confusion in the comments and stuff like that. So I figured maybe this can help someone. So I hope it did. I hope you found value in this video and this update. I appreciate all of you. Share this video with someone, like it, subscribe to the channel if you want to hear more from me. And I will see you in the next video.